I'm about to drop the hammer and dispense some indiscriminate justice.
Yeah, oh, hey everybody, this is me Tesla here. Wow.
Welcome back to Strongman Personal Finance. I'm Christopher Bell, a very sick boy, long-term boglehead investor, author of the book Stop Being a Broke Loser. It's on Amazon for $3, and hater of this degenerate gambling clown. Meet Kevin and his stupid courses that are going to cost you not just the price of the course, but probably tens of thousands of dollars over your lifetime. Why? Because Meet Kevin is a gambling degenerate who does not factor in anything, any fundamental analysis, any taxes. He just trades and gambles and tries to time the market, which has been proven over and over again to frickin' fail. Now, instead of paying this bozo $762 to learn how to trade unprofitable stocks, you should instead go to bogleheads.org, read up, and then start maxing your tax advantage accounts, that's your IRA and your 401k, and focus on buying index funds. And then when you're wealthy sometime in the future, then you can maybe consider using a small part of your portfolio to gamble on stocks. But listening to this idiot right now and putting the majority in your portfolio in his plays is going to screw you because he's buying mostly unprofitable companies. Let's go see.
Me, Kevin here. All right, we've got 3 stocks that we have to talk about. Y'all know that I've been really big on RCC for the past, maybe 2 months-ish here. I've been selling off some call options.
Short-term capital gains taxes.
I've been selling puts, but I haven't actively been buying heavily until, well, this week. And the reason for that is I see 3 interesting opportunities in the market, and we're going to talk about all 3 of those in this video.
I mean, yeah, they're all losing money. So, of course, they're just interesting opportunities. You might as well YOLO into unprofitable companies. You know, don't max your tax advantage accounts. Don't buy total world stock market index funds. You know, max your IRA, your 401k. Just buy the stupid stocks that this frickin' clown recommends to you because it's the future. And if you listen to what he has to say, it's always about the story. It's always about the narrative. He never talks about the fundamentals. And any price targets that he has, they're just completely pulled out of his butt, okay? This guy is a fraud. He wants to convince you that he's super smart, he's a genius, and that convinces you to buy his rip-off course. So not only are you spending thousands of dollars to learn how to be a stupid gambling idiot, but on top of that, you're going to be buying a bunch of unprofitable stocks that are going to get freaking annihilated. And do you think he even talks about IRAs or 401ks in his course? I highly, highly doubt that because he's all about gambling and day trading and making a quick buck, which never seems to work.
As usual, this is not financial advice. I could be totally wrong, and if you lose money, don't sue me, bro.
Don't sue me. I mean, I sell $1,400 courses or whatever. Don't sue me, though. I'm not giving you financial advice. I'm a good person. I'm just me, Kevin, bro. Hey.
These are just ideas. All right, but I am going to thoroughly explain my ideas. Now, if you are part of the Stocks and Psychology of Money course, you already know about these 3. And if you're interested in joining that, you're always welcome to check out the 40% off coupon code link down.
It doesn't matter if it's, okay, well, if it was 100% off, okay, then you can look at it so you can laugh. Do not spend a dime on his freaking garbage. Every dime you spend on his trash is a dime you could have put into your tax advantage accounts and invested in total world index funds. That will do much better than what this idiot is pumping on you. But he doesn't want you to know that.
Down below. Does expire August 31st. You get 40% off lifetime
It expires. Buy it now. Buy it now.
Access. Also comes with private live streams where we do a lot of this kind of analysis. In fact, at least 2 of these we did detailed private live streams on before we made any kind of decision. We kind of went through the fundamental analysis together. You
didn't do any fundamental analysis. You don't even know what discounted cash flow means, Kevin. You buy hype stocks. You look at a stock and you say, wow, it has a really good story. Therefore, I'm going to buy it. That's it. And then you have these arbitrary price targets in your head. That's all you do, Kevin, okay? Go watch Everything Money or Jay Nagy or Investing Sucks or whoever to see how to actually analyze a stock. And compare that to what he does. He does not analyze fundamentals. He's a freaking clown.
EA together, the social ARB, you know, trend checks, everything is great. So if you like that kind of stuff, you want to go more into detail, feel free to check that out.
Nah, I'm good. I'd rather max my Roth IRA. January 1st, 2022, I could actually put $6,000 in there, and $6,000 for my wife. But if I bought your course, well, maybe I wouldn't be able to afford to invest in my IRA. But you don't care. You just want my money, you disgusting grifter.
Via the link down below. Okay, folks, for now, though, let's go ahead and check out number one. Number one on the list is AFRM. AFRM is a stock that, at the time of me recording this, is up like 30+% in the after hours. And
oh my god, it went up in the after hours. You gotta buy it now. Buy the top. Buy it now.
That's because a massive shift of a catalyst just occurred. So you might know that AFRM is the buy now, pay later platform. It is a stock that has been absolutely battered since it went public.
All right, let's see why this stock has been battered. I wonder. So here I have, sorry, I'm sick a little bit. Here I'm on Yahoo Finance. We're going to look at the fundamentals. Let's look at the income statement. Let me guess. They do have growing revenues. Wow. Negative operating income over the last 3 years. And, you know, negative net income. And it's growing losses over the last 3 years. And cash flow. Looks like negative and growing operating cash flow. And negative and growing free cash flow. So the company's just burning money like crazy. And they had financing cash inflow, which means they probably issued a lot of stocks, okay? The company is trash. It's unprofitable. And if you watch further in the video, they basically give like 0% interest financing. How do you make money off that? That doesn't make sense to me, okay? I think he was like, oh, they help finance, or they'll charge interest for like really sub-quality loans. But it's like, okay, well, you're lending to the people that are less likely to pay you off. So overall, I don't see this company. I don't see how they, you know, have a sustainable competitive edge. And they don't even charge freaking interest for the majority of their sales. It's ridiculous.
It went public. It briefly skyrocketed it up to 146. Somewhat, you know, missing a path to profitability. And
really, Kevin, that doesn't matter to you, though, does it? Just buy the stock. Don't max your IRA. Just buy the stock. OWLT is getting destroyed with SPAC redemptions, and so a lot of shares are being issued right now. It's a little kooky right now. Dilution.
OWLT, you probably won't know what the heck OWLT is unless you have a child. OWLT is basically a company that manufactures and sells pregnancy products. The reviews for them are absolutely amazing. Search trends going up. Everything about OWLT I love, I associate with. It gives that parental peace of mind. Think about it this way, okay? If you have a little child, a little baby that's just born, okay? Literally newborn, couple weeks old. Everybody drills into your mind that there's this thing called SIDS, Sudden Infant Death Syndrome. And so parents are like mentally so paranoid because...
See, he's talking about a story. He's not talking about fundamentals. And we're going to go look at OWLT. And oh, by the way, I have an OWLT for my newborn son. That doesn't mean I'm going to buy the company, okay? Sure, it's a great product. But if the company doesn't make a lot of money, or they don't make any money, or they lose money, why would you buy the company? Why would you invest in a company that loses money? He only cares about the story. Oh, it's a great product. It does this, it does that. And it's true. But if the company's not profitable, then you shouldn't invest in it, okay? Meet Kevin.
Like, babies and children are absolutely precious. Like I get tears in my eyes just thinking about it, okay? So...
You think he's crying when he sees my child? You know he watches my videos. Does he cry with joy at how handsome my son is? And how great he's going to be compared to me, Kevin? Yeah, I bet you do, Kevin, don't you? You wish you could have a son as delicious and amazing as mine.
You can wrap their little baby feet with an OWLT smart sock. And I know that sounds insane, like, oh my gosh, smart sock. It's actually really good.
So, like I said, it's good technology. You put a sock on the baby, and it monitors their heart rate and their oxygen. And it sets off an alarm if the oxygen goes bad or the dips too low. It's not a bad product, but that's not the point of buying a company. It's not how good the product is if the company makes money. So, let's go and look and see if OWLT is actually profitable. I hope they do well, but, I mean, if they can't turn a profit, what are you going to do? What the hell? There's no information? All right, so there's really nothing. I guess they recently started trading. But you can at least see they have negative earnings per share. So they're not profitable at all. So they're getting freaking hammered. Oh, here it is. So they have growing revenues. That's great. But they still have losses. So, I don't know. Another unprofitable company. Me, Kevin, buy stories. I buy profits. Big difference there. All right, let's see his third stunk.
Somewhere between $400,000 to $500,000 into lemonade. Yes, I put this money into lemonade. I put this money into lemonade at an average cost of about $72. I already own a lot of lemonade.
How did you know how to buy that, Kevin? I guarantee you it's probably not profitable, okay? How did you value the company? Price to sales ratio? Yeah, Kevin, please. Just don't listen to this guy. For the love of God. Do not buy unprofitable speculative companies. You cannot afford, as an average, middle-class investor, to blow your money on stocks that you're just praying go up. You don't know anything about the fundamentals. You're just praying they go up because some clown told you that it's a good buy. That's not the case. If you buy an unprofitable company, you're speculating. And really buying any stock is speculation because you don't know what the future earnings are going to do. That's why I say instead of buying 1 or 2 stocks and potentially losing all of your money, focus on maxing your tax advantage accounts and buying total world stock market index funds. And then in 10 or 20 years, when you have $500,000, $1 million, $2 million, okay, then you have some money. You can afford to gamble a little bit of that money and do speculative stocks. But when you're young, you can't be gambling and potentially losing all your money at such a young age. Because the more you gamble that you're younger, the less compounding you're going to get. Let's say you're 20 and you lose $10,000. Well, if you had instead invested that $10,000, that could have been $40, $50, $60, $80, $100,000 had you simply put it into your Roth IRA. So by gambling on unprofitable companies, you could potentially lose hundreds of thousands of dollars. It's ridiculous. And on top of that, he wants you to pay for this garbage analysis. He doesn't look at fundamentals. He listens to stories. Listen to his freaking justification for why lemonade is delicious. Oh, it's search results.
Very smart company. Okay, watch this. So Root Insurance, they do car insurance, and their search trends over the past 5 years, their search trends, doing pretty well. You've got a nice uptrend here, but it's not perfect, okay? Not perfect. But if you type in Lemonade Insurance, right now they're getting popular off pet insurance. I kid you not, pet insurance and renter's insurance. They're right here, just below Root Insurance. They're
People are searching Lemonade Insurance more. That means the stock's going to go up, ladies and gentlemen. Doesn't matter if the company's unprofitable or not. Let's go see if they're actually profitable. Probably not, but yeah, negative 2.92 earnings per share, of course. So all 3 companies are freaking highly speculative growth stocks. Revenue over the last 3 years, 22 million, 67 million, 94 million. And there's actually been a dip in revenue over the last 12 months. Let's see. Loss every year. Loss. Let's look at it from a cash flow perspective. Operating cash flow. Negative 40,000, negative 78,000, negative 91,000, negative 112,000. Financing cash flow. Looks like it's going up. That means they're probably issuing shares. Free cash flow. Negative. Come on. Why would you buy this instead of an index fund? You could buy every company in the world. Why would you potentially lose all your money buying trash like this? Because this freaking moron right here told you to do it, okay? I'm sick of him. I'm sick of his stupid garbage. It seems to me the dumber you are and the more gambly you are, the more successful you are on YouTube. And I'm going to laugh when all these shills that come and comment on my channel. You're stupid. You don't understand. Index funds are boring. Let's see in the next 10 or 20 years who actually does well. Someone that maxes their tax advantage accounts and buys total world stock market index funds on a consistent basis, or a gambling degenerate clown like me, Kevin. Buy calls, sell puts, trade this stock, swing trade, cryptocurrency, real estate, sell this, buy this. He's full of crap. Tax inefficient, gambling trash. That's it. Unsubscribe from this freaking moron, this degenerate loser. Max your tax advantage accounts, buy total world index funds or target retirement funds or whatever, index funds, and Avoid listening to this gambling degenerate trash. Oh, just buy unprofitable companies. Oh, people are searching lemonade more. That means you have to buy it. Anyway, that's it. I'm sick. I'm sick. I'm dying. I'm actually feeling better. Anyway, that's it. Like, subscribe, tell your friends about me. Screw Meet Kevin. Come on, I'm so close to 1,000 subscribers. I can make like $10 a month. Come on, subscribe. I need that $10. $10 delicious dollars a month. Talk to you later.